Hey everyone, my name is Rodell Razor. I'm the CEO and co-founder of X Factor Capital, and I'm going to be showing you guys the inside of our new podcast, the Underestimated Podcast. We're going to be interviewing founders from all over the country. We're going to be telling their stories about the obstacles they've had to overcome, the things they've had to do to build their businesses, whether it be through fundraising, acquiring customers, technology, all these different challenges that you have as a founder, and how as an entrepreneur you have to overcome those challenges, and how as an underestimated entrepreneur they have unique challenges to them, how they go through that process. We're going to tell their stories. We're going to highlight some of their businesses. Hopefully you guys can see some of their great products, some of their great services, and for those of you that are interested in entrepreneurship, this podcast is for you, because it's going to inspire you to go beyond that threshold of where you want to quit, to go through that wall. And these stories are absolutely incredible. So you guys stay tuned. Come along. Hello, welcome. This is the Underestimated Podcast, episode 1. I am joined today. My name is Rodell Razor, and I'm joined today by Viola Carmona. Thank you for joining us, Vi. I really appreciate you being our first guest. I'm really excited to chat with you a little bit about what you're doing from a business standpoint, who you are in the world, what you stand for. I've gotten a chance to get to know you over the last, about month or so. Just hearing your story, what you're building with Champion Lender, and really looking forward to sharing your story with others, what you're doing with your company and what Champion Lender is doing in the world. So why don't you just introduce yourself a little bit, who you are, where you're from, and then we'll dive into a little bit more about what Champion Lender is doing.
Hi everybody, I'm Viola. I always get nervous talking about myself, but I grew up in a small town called Ocala, Florida, and joined the Navy right after I graduated high school. Did a little bit of college in between. After the Navy, got out. I was stationed in San Diego, got out there, and then started working at a call center. And then from there, ended up owning the company that I own now. And that's pretty much it.
Yeah. And so tell me a little bit about what Champion Lender, what does Champion Lender do? What specifically would you say if someone says, hey, what do you do?
When I got out of the Navy, I worked at a mortgage call center. It was like the first job that I can get. I just adopted my son and was looking for a job, right away, and loved it. Worked my way up, and the call center had a pretty decent exit. And instead of going to work for somebody else, I was like, I'm just going to open up my own mortgage lead generation call center. Over the last year and a half, I had developed amazing clients. And so I just kind of took them with me. And then, just working the lead gen side of the mortgage industry for about 4 years, and then picked up a new client. That client had some excellent detail reporting. And so when I started seeing some of my leads come back as like non-qualified after they've already been transferred and pulled applications, I started to get a little worried. So I did a little digging. And at that point, I was like, okay, we have a problem, right? Almost all of these people that are getting denied at the underwriting stage are Black and brown people. And they're getting denied for like the simplest things. And so I went home that night after I got out of the office and decided I'm going to become a broker. And I feel like the broker should be that preparation step between the consumer trying to buy a house and by the time they get to underwriting. I definitely wanted to make an impact. So Champion Lender became an actual mortgage brokerage. We still do lead gen in all 50 states, but we picked up 5 licenses and we're hoping to pick up 5 more. And the biggest difference between our brokerage and other brokerages is that they don't really prepare the potential homeowner for a lifelong commitment, because buying a house, you're looking at least 30 years, right? Unless you get like a 15-year mortgage. So they're not really preparing people. They're also not following the steps that they should be taking in order for their clients to obtain a mortgage. And like I said, it directly affects the Black and brown population by like double the rest of the population. So
you found in your research before you launched the company, you were finding that Black and brown people predominantly were getting denied home loans because of preparation, essentially, not really qualification, but they were missing the qualification window because of just poor preparation by being first generation home buyers, not having someone in the house that's kind of helping them, whether it's with taxes or whatever. So is that what you were finding in your research?
Yeah. So like I said, we were 4 years deep into this company by the time I started noticing the pattern, right, and started doing my own research. At that point, the first thing I saw was these people are getting denied for really simple things. But it went way further than that. I mean, you could literally throw a rock and hit a report anywhere on the internet that shows that Black and brown people are being denied double the rate of the other borrowing populations, but nobody says why, right? So HUD actually did a report that said it's the three reasons: education and resources, financing, and credit. And these are the things that are kind of unique to our population. And when I say our population, obviously as a Afro-Latina, my population, that we don't get that preparation. We don't come from generational wealth. You know, we don't get the financial knowledge. Oftentimes our moms and our dads are working like two jobs. And, you know, we'd be lucky if our parents passed down a home to us. So there was no real preparation for that. And then also, you know, credit practices and, you know, just lack of financing, you know, directly affects our population more so than anyone else. So it was a combination of all three things. And it's been identified over and over again, but no one has any real solution to fix that, because financing, credit, and education is seen as a personal problem. That's something that you have to take on yourself, and you have to feel moved or obligated to learn more about these things and go seeking that. So when a person of, you know, my color or heritage comes into an office and they see, you know, they fill out an application like, okay, I'm going to buy a house. I've heard a couple things here and there on how the process works, but I'm expecting this broker or this lender to explain the process to me. Yeah. And then oftentimes that's when they find out you don't qualify because ABC. Now, getting denied at that level sets them back 3 to 12 months. You know, whether they have to save up for a down payment, or they didn't have enough, or they need to fix some things in their credit, at least 120 days, or just some of these educational resources like the first time home buyers courses and the down payment assistance programs. They didn't even know about those things, that they were available. And by the time they do, those resources run out quickly. So again, for us, we're like, let's tackle all three things at one time, get the homeowner prepared to buy a home, and not only prepared to buy the home, but make sure that we are instilling good practices so that they can keep their house, so they don't default. And that's what we do now. Got it.
Okay, so there's the education component, there's the financing component. What was the third one? Credit. Okay, so those three, you know, like you said, they definitely impact. There's definitely a race and ethnicity component, but there's also a class component. There's a level of classism where people who are wealthy or have generational wealth or even generational education, they're walking their kids through some of these things. Like some of us, you know, maybe we had the credit education, but we didn't have the finances, or we had one or the other, right? You're missing one of the three components. So you're saying that Champion Lender offers all three of those things now. And so as you as an entrepreneur, you saw a problem not only, and this is what I think is really cool about your business, because even though your heart behind what you're doing was like, hey, I see a gap in a problem within the Black and brown community, or, you know, within the underserved communities, but your product and your company serves everybody. Talk to me a little bit more about, I mean, you serve literally, I mean, you have dozens, hundreds of customers all over the country. Talk to me a little bit more about that.
Yeah, so that's so funny. Like I actually had a closing recently. A gentleman came into our office and great credit score. I mean, he was like a 720. Had enough down payment, great job, comes into the office. We go to do the pre-qualification. We tell him, you don't qualify for a loan. And he's upset. He's like, what are you talking about? I have great credit. And I'm like, it's your DTI. And he had no idea what that was. And, you know, he was a middle-aged white guy, to put it bluntly. But, you know, he didn't know what DTI was. So that's the cool thing about our...
and explain DTI real quick for the listeners, what DTI is and why that impacts.
it's your debt to income ratio. So when a loan officer, when underwriting is looking at your ability to pay your mortgage every month, you could make $1 million, but if you are spending or you have debt, $999,000, you're not going to qualify for a loan, no matter how great your credit score is, because you don't have enough money to pay your bills, basically. So DTI is really, really important. I think it's one of the most important things aside from credit and having that down payment, because there's all sorts of resources for the credit and down payment, but there's not a lot of resources for your DTI. That's the educational component that's on you. Like, you have to figure out your bills and know what you have to lower your DTI, what you have to get rid of, what you can pay off. And those are the things that are very manual to the home borrower. But like I said, in the program, we teach you all of that, all those tips and tricks to get your DTI down as well.
See, I think that's really interesting. What you said about the down payment, like there's so many programs, first time home buyers, so many programs that want to help with down payment, so many programs you can go through for credit repair to get up to that 720 so you can qualify for most financial products. But the DTI, that's a personal finance issue, right? Like that's a budgeting issue. That's a student loans, car payment, credit cards, all those things that we accumulate and we go try to create more cash flow. But when we have the debt that's offsetting some of that cash flow, that really determines what your mortgage can be or how much house you can buy, if at all, correct?
If at all, yeah. And most people, they think, well, I pay my bills on time, I make it work. And that may be fine and dandy, but you have to prove that to the bank. The bank has to feel like you're going to make this 30-year, 15-year commitment and pay your bills on time. And also the bank, contrary to popular belief, they don't want you to fail, right? They don't want you defaulting on your loan. So they're not going to put you in a position they're setting you up for failure. Unfortunately, the brokers that, and I don't want to say every broker is this way, but most brokers and most lenders are just kind of like pushing things through. Oh, that kind of looks okay, let's just get you through. And that's where you're seeing all these defaults and people coming into foreclosure. We really, really emphasize that this is a 3-month program minimum. You're going to spend at least 3 months in this program to make sure that not only when you get the house, you're going to be able to keep it and then pass on that generational wealth. Because if I have to say generational wealth, to obtain it in this day and age, you have to buy a house. It's the only viable way to create it, to start it, if you don't have, things passed down.
No, I think, real estate investing, REI, it's become a buzzword in social media, right? And generational wealth is another one of those buzzwords. And I think it's interesting. I want to go back really quick because we talk a lot. I hear a lot of this. And I think it really does impact our society as a whole, where I can rent a home for, let's use an easy round number, $2,000 a month in rent. But the bank says I can't own a home with the same mortgage. From a lending side, why is that the issue? Why can you articulate why that's a problem? People talk about it all the time. It's like, I can afford a mortgage that's $2,400, but I can't, or a rent that's $2,400, but they want to give me a mortgage that's $1,900, right? Like, why does the bank answer that question for those of us out there?
Yeah, I mean, honestly, there isn't any each bank has their own answer to that question. There's no universal answer. But if I had to put one, it's because you're not just paying rent, okay? You are owning a piece of property. And the people who, on the lending side, invest in that company that's giving you the mortgage. They want to make sure that you are not a risky bet. So it's just like if you were investing in say, Champion or any other company. You want to make sure that not only are you paying your bills, but you can pay your bills for the next 30 years. When you're renting a home, even though your past shows that you can pay your rent on time, it doesn't really foreshadow the future. Okay, if God forbid you lose your home, or your job, or you get cut, your hours get cut or whatever, it doesn't account for that. So I think that's kind of like the general idea. It's a bigger commitment.
And then that leads into the next question. I got a chance to read your article on generational wealth, and your opinion of it and where you came from. And so I'd love for you to sum up your feelings on the buzzword of generational wealth and, what that actually means. I think most people don't have a context for one generation, right? Like the amount of money it takes to take care of even one generation. And so talk to me a little bit about your feelings on generational wealth and how that's built through real estate and that first purchase of a home.
Yeah, this is something that I center the company around, this generational wealth. And like I said, I'm a firm advocate of homeownership. Now, it kind of gets to me a little bit, and I kind of get a little emotional about it because, I didn't think about generational wealth until my son was born. And then I started thinking about like the life that I've lived before. And my parents were very well off. I mean, they weren't like billionaires or anything like that, but they were very well off. But they came from that old school mindset that we worked hard for what we have, so you have to go work hard for what you have. And there was a gap in between, high school and the Navy that I struggled because my parents kind of threw me to the wolves. And I started thinking about, man, what if my parents would have invested and they had the money, invested in my college. I didn't have to get scholarships, or I purchased a home at that point. I could have borrowed money. Having an asset to be able to pass down to your children to make their life a little bit easier and build themselves up. It's hard to make it in this world and then also try to build wealth. If you already have a base and you're not worried about like constructing out, I'll just put it in terms of a house. You're not worried about constructing the floor of the home and you're just worried about the walls. You're going to build a house a lot faster. Okay. Generational wealth and being passed down is setting a foundation for your child. Now, why I choose home ownership as the first gateway to generational wealth is very, very simple. One, you have an asset for the rest of your life, or at least for the next 30 years, or if you want to pass it down. If anything should go wrong, you're able to borrow from your home. Generally speaking, minus 2008, home values always rise, right? So you'll have a piece of equity that you can tap into. That's one. Two, say your kid's going to college or you need to pay for an emergency. Again, you can go ahead and borrow. Three, if you want to start making investments, which is the next step after home ownership for me, you have an asset as collateral. Whereas if you were just renting a home and you were trying to buy an investment property, that's going to be a lot harder. Like the barrier to entry is almost impossible to cross. So creating that foundation for your children and your children's children will put them in a much better position to tackle the obstacles of life, whether it be college, whether it be starting a business. From my first home, I borrowed to start this business and to put money into it. So I didn't have to go to the banks, because oftentimes we know banks are very, very strict. I know that I had to be in business for at least a year back in the day in order to qualify for a loan. And what was I going to do before then? So
yeah, no, that's real. And I think the generational wealth conversation, you talked about it, about your parents being well off, and then saying, hey, I built it, now you go build it, right? And the damage that caused for you, the trauma that may have caused for you in the relationship with you guys. But I think what also happens on the other side of that is, hey, I never had anything, you can't have anything. Or you starting, I gave you more than what I had. And the way parents, how we parent our kids, I'm sure you parents out of a different space now, you can't wait to give off to your children, right? And there's some parents where they kick you out at 18 with no plan, that's a generational curse, right? And we find that a lot of parents are so ambitious about their kids, just, hey, your life was better than what I had for the last 18 years. Good luck, right? And historical families that build generational wealth, they set the next generation up, not only education wise and a better upbringing and things like that, but they set them up financially. A lot of first gifts for wealthy families is their first home after they get married or graduate college, right? They go buy that first home, or it's an investment property for the father and the grandmother, whatever it is, and they're passing on. They're writing a check for college tuition, whatever it may be. And some of us, we're so excited about getting in position. But we also got to be excited about what we pass on, and that we leave that education, because you got to witness wealth being built, within your family, but then you didn't get to participate in any of it, right? Like you didn't get to participate in the activities. Yeah.
I mean, I love my parents. Let me tell you, God bless their souls. But my parents are amazing. We had everything growing up. But the philosophy that my parents had was, we built this from the ground up. You have to learn how to do that. And while that's all fine and dandy, and I love my parents for that because I am where I am today, it was such a harder road than if I would have gotten just a little help. If they would have, they had the money to purchase my first home. They had the money to pay for my college. I wouldn't have had to suffer. And I feel like people take pride in that journey, and you have to kind of grind it out, and there's no glory in that at all. I do not want my kids grinding it out if they don't have to. Absolutely. Because that's where a lot of the mistakes happen, and sometimes you veer off the path. I was lucky enough that the military was there for me and got me on the path, but God knows what would have happened had I not joined the military.
Right.
Shout out to Navy. Yeah. But I don't want that for my kids.
No, I think that's really important to talk about. That is spoken like a true CEO, and that is because you believe in the humanity and dignity of business. You believe that business is really out to solve a problem, and that if they could solve it, then they probably would, because it probably would be profitable. So they've found there's a link in the chain that they're just like, it's too painful to go there. It's too hard. It's too small that it's not profitable enough. But if someone else took it on, then we would support, and whatever it is, right? And I think that's something that all of us entrepreneurs, we can just love and acknowledge and respect maybe what other big institutions have built, and leverage their resources and sometimes their research. I think some of the big institutions, they do the best research because they have the money to do it, but they just don't have the legs on the ground or the relationships or the grit to do some of those things. And a lot of people look at companies like Facebook or whatever, and they look at these companies that have created these big problems in the world, but they're too big to pivot. I just watched the movie Titanic. It's new it's back on Netflix. I had never really seen it. My wife loves it. And the boat was too big to move that quick. Small boats, entrepreneurs, startups, they can move a lot faster, right? We can be more nimble. We can solve problems. We can go into nuances and niches much quicker than these big institutions. And so I think that's amazing. Go ahead.
Real quick, I just want to touch on something you said, because it's so funny about these bigger companies doing the research for me. Honest to God, if you look at every single report about minorities and the barriers to entry, they all came from these big guys, and I read them. Yep. They're like, oh man, we did a statistic, and you know what, hell, that saved me money. Like, I didn't have to spend 100%. Millions of dollars on that research. Thank you for that research. 100%. So yeah, do your research, and don't not just about what they're doing or what they're doing wrong, but they know. Like, if you're in a space, I don't care if you're solving the Uber solving the rideshare problem. Taxis knew what the problems were. Right. They knew, and they researched, and there's probably papers out there. And the guys over at Uber was like, you know what? I'm going to read that and expand on it. So, don't knock your competition,
Yeah, that's good. That's good game right there, man. That's gold. Like you said, that's the secret sauce. That's CEOs, entrepreneurs, founders out there that are really wanting to build something special. That is something that your competition or the problem you're solving, the ones who have created the problem or ignoring the problem, pay attention to them, work with them, ally with them if you can, because that is a secret weapon, because they have the resources to do a lot of the homework. And in a lot of cases, in your case especially, some of them are your clients, but that's another podcast for another day. So, Viola, this has been an amazing experience chatting with you, getting to know more about you, champion lender. Thank you for serving our country. Thank you for serving our people. You've done a great job being my first guest. I thank you for that. And I'm looking forward to the partnerships, the customers, the investors that get their eyes and ears on this, because this is a real treat. So thank you again. Thank you, champion lender, and to your entire team for sharing you for the last hour. I'm excited to see what comes over the next year. Thank you, Viola.
Absolutely. Thanks, Razor.
Take care.
Bye, guys.